Hi everyone. This is 2026 Leadership Program Lecture 38. And in this lecture, I will be doing a top analysis on the dollar index. Now, before going through the top analysis, I'll be doing a review on what was discussed on the Telegram group. So we're going to talk about what I showed you guys to look at in price and what price actually did. Then we're going to talk about what price is most likely to do going in this week. On the weekly time frame on the dollar index, now, for those that have been following the previous lecture, you know that I have stick to the bias of anticipating higher prices for price to run the buy side liquidity. That have been my bias for weeks. I can say for months now. So the idea is that price is we're expecting the weekly order block. And as long as price is above the zero point 0.5 level of the weekly order block, I'm anticipating higher prices to run the buy side liquidity. So last week, we were anticipating higher prices after the up close candle, after the week where price closed as an up close candle. You can see it's an impulsive candle. Trading through this candle, previous week took out the high. So last week, price took out the high, traded back into the range. Now, I did explain about the trade that traded above to run the weekly high, which I posted about it on the Telegram group. I told you guys that I'm looking for that continuation. I point to get to the specific day when price traded higher. And I gave you guys an Hero USD chart for you to study on, which was where I took my setup, which you guys know I do my top analysis on the dollar index. I look for that correlation on Hero USD to take advantage of terms where I have a clear perspective to where the dollar index is actually trading. So, so going in next week, I'm still looking at price trading higher. Saying the price did an internal shift, running out this high, and you can see there's a fair value gap. There's a weekly fair value gap in price. So going in this week, if there's any possible continuation in this trend, like a retracement to the weekly fair value gap, I will be anticipating higher prices to run the buy side liquidity. Now looking at this candle, looking at how the candle closed, is a ranging candle and it did not close above this candle's high. So I wouldn't be looking for a candle continuation immediately. I would like to see a retracement lower to the weekly fair value gap before actually anticipating a continuation in the trend to the buy side liquidity. And I'll be putting most of my attention to the daily time frame to look at what is the most likelihood of the daily time frame actually trading higher or retracing to the weekly fair value gap for me to anticipate a continuation in that trend in price trading to the buy side liquidity. So the daily time frame is going to be the time frame we're going to be using for the timing to when we are actually going to be trading higher or trading lower. For the retracement to the weekly fair value gap, we'll align the weekly time frame with the daily time frame in anticipating a continuation in price trading higher. On the daily time frame on the dollar index, looking at what price did last week, you can see there was a Monday retracement. Tuesday did not trace the daily fair value gap on the dollar index, but on Hero USD, there was a retracement to the daily fair value gap, which I pointed out on the Telegram group. I told you guys to look at the SMT diversion on Hero USD and the dollar index, that there's a possibility of Tuesday trading higher to run our weekly target, which was Monday's high because Monday opened after taking out the candle's high, which was taking out this buy side liquidity. Price took out the buy side liquidity on Monday before the retracement lower. So on Tuesday, a continuation in that trend in price running out Monday's high, which was our draw on liquidity. But on the dollar index, looking at the dollar index, seeing the price took at the high and there isn't any impulsive price action, let's say an up close candle, a candlestick continuation, a CRT continuation, and price trading higher. Instead, we can see that the price is rejecting, creating a CRT retracement. So if you have been in the Telegram group, you know that I was pointing out that there's a likelihood of a retracement to the daily fair value gap that I'm currently anticipating a counter trend to the daily fair value gap. So I posted about it on Wednesday. With Wednesday price closed as a down close candle, but there wasn't any clear entry, which I'll go into the 1 hour time frame to point out the setup that I'm actually talking about. But looking at this rejection, looking at how price closed, going in next week, I'm still looking at price retracing to the daily fair value gap before anticipating a continuation to the buy side liquidity. So I'm going to put my attention to the 4 hour and the 1 hour time frame. Looking at those trend, if the trend is aligned with the idea for a counter trend for a retracement to the daily fair value gap, I will be anticipating a retracement to the daily fair value gap before looking at price trading higher to run the buy side liquidity and a possible continuation on the weekly trend in price running out the overall target. So on Wednesday, I was looking at the CRT retracement. On Thursday, I was looking at the CRT retracement. The same goes to on Friday. I was looking at the CRT retracement. Now, after Wednesday, I posted a 1 hour chat talking about how I'm looking at price retracing from a 1 hour fair value gap trading lower, which you can see price did not retrace after running out Wednesday's high. Price did a retracement back to the range and close, which is still a CRT retracement. So on Friday, I posted about it that price failed in trading lower, but looking at what price did on Thursday, there's a likelihood of price retracing lower, which is still aligned with the CRT counter trend to the daily fair value gap. While looking at it from a price action perspective, you can see there's a lot of rejection in price. Anytime price creates a new high, it rejects back to the previous candle's range. There's a likelihood of a retracement before the actual move in price trading higher. On the 1 hour time frame on the dollar index, uh, now on the Telegram group, the first setup I posted about was this retracement on Wednesday. After price retraced on Wednesday back into Tuesday's range, there was a 1 hour fair value gap. So before the London section on Thursday, I posted the setup telling you guys that I'm anticipating a retracement lower, which you can see price traded to the 1 hour fair value gap, did a little bit of retracement before trading higher, running out Wednesday's high. After price took out Wednesday high, there was a retracement back into the range. So on Friday, I posted the same idea, telling you guys that price failed in trading lower on Thursday. But looking at the price action, looking at how price did a retracement back into Wednesday's range, there's a likelihood of a retracement in price trading lower. So I posted about it that I'm looking at price retracing from the 1 hour fair value gap. Now, the 1 hour fair value gap is still valid to the trade idea because price is still on the 1 hour fair value gap. So going in this week, I'm looking at price trading lower down to the daily fair value gap. It's mostly aligned with the idea of a CRT and saying that price did not trade above this high, making it a swing high. So it's now a valid swing high. And if there's going to be any retracement in price, I'm looking at price trading lower to the daily fair value gap. Now, this is a low probability setup because there is a likelihood in price expanding higher because the overall trend is price trading higher because the overall daily trend is in an uptrend. So there's a likelihood of a continuation in that trend. So trading a counter bias, you know that you need to look at it as a low probability setup where you're not going to be going in with a full max position and you wait for the right timing or the right correlation in price before actually taking any trade, like a real 1 hour shift in price before actually looking for a setup. So there's a you need to have a little bit of a confirmation. You need to have more confirmation in price before actually taking counter trend. Now, I wasn't going to be putting counter trend on a Telegram group, but I look at it that as long as it's in my plan, and I promise to show you guys my whole plan throughout the 2026 mentorship program, what I do on a day-to-day basis. If you have been in the Telegram group, you know that I've been giving you guys daily trade idea on what I'm actually looking at in price and how price actually trade to that trade idea, which I'll be putting more time into the Telegram group. And if you want to have a maximum experience on the 2026 mentorship program, you should join the Telegram group. So going in next week, I'm looking at how price will be retracing to the daily fair value gap before anticipating a continuation in price. We might see a gap in price trading lower or a gap in price trading higher. That was one of the reasons I don't hold price throughout the weekend, because looking at this, you can see there's an internal shift before the closing price, but I didn't take advantage of the setup because I knew that I wouldn't be holding up the trade throughout the week, throughout the weekend before the opening price on Monday. Because I don't hold trades on the weekend, I'm actually going to be waiting to see how price will be opening, to see how I can take advantage of it. Which, depending on how price will be opening, I will be giving you guys an update to what I'll be doing on Monday, which will be posted on the Telegram group. So make sure you stay active on the Telegram group to try to be more interactive on the Telegram group. But that's it for this lecture. See you guys in the next lecture.